Yo, what's going on, world? Welcome to the Digital Surf Trading YouTube channel. I'm back again today. I go by Horace if this is your first time visiting. And today I will be going over none other than the promising Cyberlux Corporation, um, producer manufacturing electrical products is their thing. So, looking over this chart here, it's a pretty beautiful chart, I must say. I'm not really concerned with the upper action over here. Um, as you may know, I typically start my analysis from the all-time low and look to find any bullish Elliott Wave patterns or wave structures from the all-time bottom. So looking here at Cyberlux, what I see with this company is a bunch of overlapping waves here, obviously. Um, but essentially, I pretty much well, let me say it this way. Pretty much we see that this is the lowest point of the chart. Zero dot quads, 0.0000. We can see that this is the lowest low. And considering this region here, we can see that this is the higher high or the highest, or not the highest high, but this is the high region right here for um the section of price action here. So sorry, I just got an email. So from here, 0.0000 to 0.0010. This is the low and the high pretty much from November 2014 to June 2017. No higher high or lower lows were reached, right? So looking at this, I'm gonna pretty much count this up as one wave coming up here, being an A wave, a B wave coming back down to the bottom of this wick, and a C wave coming back up to the top of this level here. Everything in this section here, I don't want to say it doesn't matter, but it doesn't change the structure of the overall pattern, right? There's no new high, there's no new low, no new high, no new low there, right? So I'm gonna look at my 12-month chart. I usually don't look at a 12-month chart. You'll probably see me more so on you see me on a seconds chart before you see me on a 12-month chart typically. But looking at this from a 12-month chart, just based on the speed of this particular structure for Cyberlux, we can see the same thing here, those three waves that I was talking about. Let me see if I can mark this up here. This up action, this up wick would be A, down wick would be B, up action would be C, right? No higher high here, no lower low here. So we got A, B, C. This is still the same higher high. So this is the end of our wave one in this hypothetical wedge formation, right? I then see three waves down. We'll say this is we'll say this is A, this is B, and this is C, right? No higher high, no lower low. I really don't like this A, B, and C section here because C should be lower than A technically. We can't see C being lower there. So let's see what we have here. I think I like this one a bit better. So for our ones here, we have our A wave come down here, right? I might need to zoom in a little bit more. See what we got here. A little bit more. Okay. So if our one ends up here, right? No higher high, no lower low in this area. We can see the same thing pretty much for this hypothetical wave 2 section. Still no higher high above 0.00 or triple zero, sorry. Still no high above 0.0010. Our A wave correction came down here, got a mid wave and B wave, got a C wave here. From this point, there's still no lower low or no higher high. So we can count this as, an accumulation phase here. No higher high, no lower lows. We have gotten our um, we've gotten our three waves in wave one, and we've gotten our three waves in wave two. So from there we should be entering wave three. This is very, very choppy down here, very overlapping. But in summary of the collective waves, we still only have one, two, three waves up and one, two, three waves down to make wave one and wave two. Wave three gets a little bit more clear. We can see wave three a little more clear, especially from this 12-month chart. If we zoom out a bit, it gets a bit more um, overlappish as well. But generally, we have the same motion here in wave three. So if we start down here, wave two, we have an up wave here, right, in this area here. We come down here, no lower low. We get our third wave up for a higher high to make wave three. That one is a little more easier to identify and to plot out here. So essentially, where we are now, we have three waves in wave one. We have three waves in wave two. We now have three waves in wave three. Not gonna see much maybe on the divergence here. Oh shit, we do see much. We see plenty on the RSI chart. We see plenty of signal here to let us know that the buying strength is becoming weaker. So we can see here that the RSI topped out. The buying strength topped out September 2021. So for the past year, October, November, for the past 14 months actually, buying strength has been slowly dying down, slowly getting weaker. Yeah, it's looking pretty weak for the bulls right here, right now, especially from this range up here. Things look pretty strong down here, obviously, but this is a weak area for bulls to hold, and I think it's going to drop. I don't think it's going to drop based on the RSI here purely. I do think that's a good supplement to our analysis, but I think it's going to drop based on the overlapping waves one, two, and three. Um, Pretty much, I am a diagonal um I don't know, Don. Like I love diagonal waves. I look for diagonal waves all the time, especially in the OTC market. I look for diagonal waves. Um, so with wave one done, wave two done, wave three done as well, we can see that pretty much with our RSI, kind of confirming that the buying pressure is slowly drying up. We can see no new high has been achieved here since 2021 September. So I think wave three is done. And if wave three is done, I'm going to look for a three wave move in wave four as well. We have a three swing move in wave one. We have a three swing move in wave two. We have a three swing move in wave three. We should get a three swing move in wave four as well. And what is great about the science of Elliott Wave theory, there are very common points to where you should look for your targets based on the position and the particular wave type or form that you believe you're in. So based on what I see here with waves one, two, and three, they're all being three waves or three swings within each particular wave number, one, two, and three. I'm going to expect three swings in wave four as well. Um, Also, based on wave three being longer than wave one, right? 0011 for wave one. Okay, 5 cents. 5.5 cents roughly for wave three, much bigger than wave one, right? So regardless of how much bigger wave one is than regardless of how much bigger wave three is than wave one, we're going to look for wave four to be longer or bigger than wave two, as this form seems to be extending. This diagonal form seems to be extending based on three being bigger than one. So with that in mind, we're going to expect wave four to also be longer than wave two. And this is actually a rule in the diagonal wave science. There are guidelines as well. So with wave two being 0010, we're gonna expect wave four to be at least 0010 and also be a three swing move. What am I looking at here? 05. So we can see here, we can see that wave four is already, it's based on how much price length it actually went up. Wave four is already longer than wave two, but wave four has not completed a three wave move as of yet. So both of those must be accomplished in wave three. Only one of those is accomplished right now, with the price length being longer than wave two. We still need three waves here. And like I said, the guideline of this particular form says that wave four most times, almost always, reaches at least 0.618 on the fib scale for the retracement, right? With this extended diagonal pattern, we can see 0.618 is clearly here at 0.trips1. All right, the common range for wave four, the retracement in wave four, the common range for that is between 0.618 and 0.89. So somewhere here in this orange box, between 0.0000 and 0.0001, those are the common fib levels for where wave four should drop in this pattern. Like I said, wave four is already longer than wave one based on how enormously larger wave three was than wave one itself. But there are not three waves completed here as of yet for wave four, right? So our first swing is done. Our first swing in wave four was first swing was 5 cents, 5.5 cents. Yep, 5.5 cents. I must have looked at this wrong here. I said this was 5 cents going up. This was actually This was actually 6.38 cents. So we've already dropped 5 cents in the initial first wave here, right? Not gonna expect, not gonna expect the C wave of wave four to be equal in length because it's just not possible. But we are gonna expect C waves to reach our 0.618 fib level, as the science of Elliott Wave tells us. It also, I mean, although this C wave here looks much longer than wave A, because I use a logarithmic chart, the values at the top of my chart are going to be more valuable than the amount at the bottom, or yeah, the lower half of my chart. So 5 cents here. This is obviously not going to be 5 cents, but it should be 2 or 3 cents based on where it starts here. Starts at 2.7 cents. We're probably going to go below zero. Um, sorry, below a penny rather, into the quads or trips area. Like I said, the common range for wave four for this particular setup, this particular structure is here between 0.0001 and 0.0000. So, um, though this looks very, 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 very great for the future, for a longer term setup, for a longer term investment, I do think there is a 99% drop coming for Cyberlux Corporation before things get any better. Not sure what's going on with management, with stocks, with dilution, with MMs, with none of that. I don't know. I don't really care, to be honest. Only thing I care about in my analysis is only focus on the chart and the structure and the price action that we see here. And based on that, I believe Cyberlux has a very great chance of dropping 99% from its current value at zero point 0.1 at 0.0111. Um, so if you're on this company, it's probably good to be a little more patient and see how price action plays out. But like I said a moment ago, buying strength has been falling, has been getting weaker since September 2021. That is 14 months ago, where the buying pressure showed no signs of improvement. So over time, buyers eventually, I don't want to say how buyers think, but because retail thinks differently than institutional traders, and it all depends on your approach and whatnot. But looking at this from a macro perspective, from a wide angle view, there's absolutely no reason why I would buy this um, from a um, from a technical analysis standpoint. Looking at this, there is no base for this to go higher. It seems like it's just in a hanging man type of formation. There's nothing here for it to bounce off of. We've already broken below like 70% of this big green candle right here. Like I said, the RSI has been slowly dying and drying up since 14 months ago. So everything looks in place for this to drop in a precipitous manner over the next, I'd say over the next 4 to 6 months, maybe. Um, yeah, for anybody that has bought this recently, I would seriously consider to, you know, make other decisions and investments elsewhere. Um, if you want to see my full Cyberlux chart, check me out. Check out the digital surf trading community via the link in my description. I go by Horace. This is Cyberlux. Hopefully, this video is beneficial for you. I'm not a basher. I'm not against this company. I only comment and talk about companies that I think have a bullish future, a long-term bullish future. So, regardless of the 99% drop come soon or to be on the way now, I think this company is going to be very profitable and very bullish for investors in the future. However, 99% drop will likely come first. So, until next time, stay safe, don't drown. It's been real, it's been fun. I'm Horace, this is Digital Surf Trading, and we'll do it again. Peace.